Wonderful good evening and welcome to our Admiral Markets Webinar Master. The markets, another hot day here in Germany, and I guess it's overall very hot today. So let's see the technical issues today. Maybe you can give me in the question and answer chat box, not in the chat box. I cannot see the chat box because only my friend from Admiral can see it. It would be a pleasure if you can give me a hint in the question, answer and question box, Q&A box. If you can hear me, if you can see me. Vincenzo, wonderful. Yes, it's a great hot day in Germany. Audio and video working great. Thank you. So Vincenzo is typing in the Q&A box. If you have questions to me, or something to our stuff this evening, please type in the chat box. George, wonderful good evening. Nice to see you. What a great pleasure for me. Okay, you see all the guys typing in the Q&A box. If you have any questions, let me know. It's your webinar, Master the Markets. We want to gap the close between theory and practice, of course. Let's talk about the markets a little bit, and of course a little bit about education. Let's talk about today in education. Is it possible to live with or from trading? How much, how many, how large must your account be, and so on. This is a little bit topic I want to talk to you. So unfortunately, I have to say something to you before we start. This is the next Wednesday is unfortunately the last time for our Master the Markets webinar. On July the 31st, 31 of July, we finished with this webinar series. After that, in August, we start with a completely new series. It's called Trading Spotlight. It's even on Wednesday, but 2 p.m. in the afternoon German time. I'm talking to Admiral Markets to find another solution, or yes, to continue this trading session that we can do that together. But at the moment, this is the fact. This is next Wednesday. It's the last time that we have this Admiral Markets Master the Markets webinar. Then in August, we start with a completely new series, Trading Spotlight. Amazing topic, amazing stuff, and amazing content just for you. And yes, the sad thing is we don't have a webinar where we can trade to each other, or we can trade together. So I hope I will find a solution for you, and for me, of course, till next Wednesday. Maybe it will help you write an email, to Admiral Markets that you want to continue with this webinar. Maybe this would be a solution, and you can support me in that way. And maybe Admiral Markets will say, okay, go on with this webinar on Wednesday evening. But at the moment, that's the fact. We have to finish this webinar series on next Wednesday. I'm a little bit sad, but we will see. Maybe there will be another solution. Okay, that's guys. That's the risk disclaimer. You know, trading with financial instruments offered by Admiral Markets carries a high level of risk, which is not suitable for all investors due to their complex nature. Before entering into client agreement or making a transaction, please make sure to read the terms and conditions of our service. Consult a specialist if necessary to ensure you understand the risk involved in trading. That means you are responsible for your own trading, whatever you do. This presentation and the accompanying video is for information and educational purposes only. That's the reason why I only use a demo account here for our trading. So, guys, it's absolutely hot here in my office. So I have the ventilator here, the air condition on the lowers here on the floor, but it's really, really hot. But I guess it's hot where you are as well. But markets are hot as well. Okay, you know the ESMA regulation and the differ between retail clients and professional clients, and you see your options you can choose between. And of course, Admiral Markets is the best broker because why you have to choose it? It's easy. We have the best index offerings about DAX30 and Euro US dollar, of course. We have no minimum stop distances or requotes, something else. And of course, Admiral Markets is available around the world. So guys, let's start with our webinar. I have to drink something. So, you know, success is not a fantasy, it's a formula, guys. And maybe you have your own experiences in trading. I don't know how long are you engaged in trading right now. Maybe you are a starter, you're a beginner, maybe you are advanced trader, or maybe you are a professional trader. However, as a beginner, I think not so much. As an advanced trader or pro, you know, without any rules in trading, you cannot be successful in trading. It's not possible. And in my opinion, and I have 20 years experience right now, but I'm not important here in this webinar. You are important in this webinar. And I want that you are successful in trading. And I want to help you, and I want to show you the way how you can become successful in trading. Therefore, I want to say, guys, the bigger challenge is taking place in your mind. And you need, of course, you need rules for your trading. Success in trading is not a fantasy, it is a formula. But where is the challenge in trading? In trading, the challenge is that you don't have guarantees in trading. There are no securities, safeties, something else. You only have probabilities in your trading, only probabilities. There are only opportunities you can use, but without guarantees. That's the point in trading. And therefore, it is so much important that you use an easy trading strategy, a really easy trading strategy, because you have to work on your discipline. You have to work on your own strategy. You have to cope that challenge that you accept that you cannot know the rules before you start a trade. So, and the challenge is that our mind is not made for trading, that we are not educated in that way now in trading. Because, you know, look at your own, how should I say, life. You learned in your life that as long as you stick to your rules, if you follow the laws in rules, you get no punishment. And if you follow the laws in your job, you know the result. Normally, you know the result. And maybe if before you start in the morning with your job, in most of the cases, you know exactly the rules. You know exactly the result in the evening. It's normal behavior in our normal life. And we are educated. Let me explain it. You see a red signal on the street with your car, you get stopped. So you stop. If the light changes to green, you can drive. That's normal. But you know, if you cross the street with your car or by feet on a red signal and the police is coming, you get a punishment. Yes, you have to pay for breaking the rules. You know that. As long as you stop at red and as long as you go or drive at green in a normal life, everything is fine. That's not normal behavior in our life. That's the way we are educated. Stick to the rules, follow the laws, everything is fine, and you know the result. With that behavior and with that attitude, you come to trading and you think it works in the same way. And you think, okay, give me a signal. Okay, give me rules maybe, and I will follow the rules and I expect the result. And maybe in the beginning, and that's the bad thing in trading, in the beginning you make winners and you have a lot of gains in the beginning. And you think, okay, it's fine, everything works in the same way I used to do it in my life. But then, after a couple of times, or after a couple of trades, you get a loser. You get a second loser, a third loser, a fourth loser, a fifth loser, 6, 7, 8, 9, 10. Between some winners again, but especially at the winners, you always, maybe you always the same, but you always get a completely different result. And here your mind says, okay, guy, what's up? That's not the way I used to do it in my life. And then you stick to rules, and then you get a loser. And then your mind says, and the small people on your right or left shoulder says, oh, you're crazy, what's up with you? Change the system. That's not the way I used to do it in my life. Change the system, change the rules, take another setup, take another indicator, take another oscillator, take another whatever you want. But it's always the same repeatings. You try and fail. You try and fail. And especially in the beginning, you don't understand why. That's the problem in trading. And at the end, you get out of yourself. Trading is able to bring you completely out of yourself. Trading is able to bring you at the border or the edges of your own personality, because you don't understand it. And some guys are very addicted at the end to trading, and they try everything to get back the money from the market. Maybe you know that experience. So where's the solution? Oh, I have good news and bad news for you. You cannot solve that issue. You cannot solve. But there is a way to become successful in trading. But you cannot solve the issue to stick to rules, to know the result, and to get the same result in every trading. It's absolutely not possible, guys. That's the problem, and that's the challenge. So my credo and my slogan in that case is accept the inevitable thing. There are no guarantees in the market. And that's the point in the first step, or the most important thing in trading is you have to be a risk manager. As long as you manage your risk, everything is fine. You can lose money. As long as you don't rise up your risk, always the same, and accept the losses. As long as you stuck to the rules in the past, the loss is okay. A loss is a part of the game, as long as you stick to your rules every time. That's the really important thing, guys. So, just a moment, where's my cam? Here's my camera. Okay. So, so therefore, that's the point. I use a very easy system. And you see it every time and every week when you work with me. The important thing is to earn more money than we lose. Yes, Vincenzo, that's the point. We need to earn more money than we lose. But where's the solution? How we can do that? All of us, we want to do that. We want to earn more money than we lose. That's the important thing. But how? That's the point. All of us have these wishes, and all of us have this intention to make more money than we lose. But the question is, that's the wrong question. The real question is how? And the point is, only if you be a really good risk manager, and of course, if you really accept the inevitable thing that you cannot, there are not guarantees in the market. So this slide you can see here is one of the easiest approaches and setups ever. Even the turtle traders, maybe you know, Google at the turtle traders, they exactly use that system. They figure out the trend and speculated on the trend continuation, because they know, and we know, that's the nature of trading. A trend continuation is always more likely than a trend break. Even we have, especially at the moment, a really hard time in trading, but the statistic is working for us because we have a statistical system with trend continuation, and the probabilities are almost 65%. And if you have the working style that you make sure that the higher time frame is working for you as well. Maybe you have a signal chart in, how should I say, you trade in hourly chart, then you have to make sure that the daily chart is supporting you. Then the probabilities are rising up to 72%. If you trade in 5-minute chart, for example, as a day trader, then the hourly chart is your big picture. It's always the same. A trend continuation is always more likely than a trend break. So make a screenshot of this if you want. And this is the picture you have to make sure it's like a template. Go through your list of trades or of underlyings of markets you watch. And I hope you are not such a guy who trade one market. It's very, very difficult to trade one market because at the end you are in danger to being in actionism. Because if you watch one market and you have rules, it can be that the whole day or the most hours of the day, your rules don't fit in that one market. And in the end, I know that experience, I made it very often in the past. And then you are sitting hours and hours and hours in front of the PC and you see, my rules don't fit right now, but I have to make money in the market. It's really hard. It's really hard. And at the end, maybe in the afternoon, and you can hear your wife crying to you, how much money do you get today? Can I buy my shoes today right now? And you have to say, no, not today. I lost money or I couldn't trade today. Why not? So then say your rules don't fit to your wife or the girlfriend or something else. They cannot believe that. And I know it in my own experience, then the partner says, okay, come on, go to a normal job and bring money at home. And that's the problem. And in the end, you will make actionism and you will break your rules. Mentally, you make money in the market, but at the end, you know, if you break the rules, you will lose. You will lose more money than you earn. So, and that's the point why I use a lot of a completely Forex list, the major and the minor currency pairs, and I have this template, and it's just a template. I open the chart, I can see, okay, does it fit? Can I make the trade? Doesn't fit, switch the way, take the other one. That's a really interesting working style, and then you have a really big chance. So, and based on this trading setup, I created these 7 rules. Rule number 5 to 7 describe where we are in the market, about the price, and about the trend. Always 2 questions. Where are you in the how should I say, in the trend? Are you in the move or in the correction? And second one, where are you about the price? Are you in the fair price zone or in the unfair price zone? This is really interesting. Please, guys, don't forget, you don't trade DAX, you don't trade Euro, US dollar. You always trade the price of that underlying. This is the real important trend. You trade the price. And the price is either expensive, cheap, or fair. And every kind of prices, even in a store and in trading as well, is too cheap, too expensive, or normal, fair value. That's the point. And the behavior of every price, and you know that, is always from too cheap, from too expensive, back to a normal price. That's the point. So, and rule number 1 to 4 describes how we can get into the market with a trend, a young trend, in the correction, as I showed you this one, outcoming of the correction, that's the Dow theory, that's the turtle taper principle. And then I use Heikin-Ashi for my trading, because Heikin-Ashi is really easy to read, because either you have a balance candle or you have a trend continuation candle. And how it sounds like the balance candle, it's a balance between supply and demand, as you see it in the market right now. Okay, that's our rules. And first and then, that's the templates for our daily chart, as we need to have the support by the daily chart. Either we have a trend, or we have a divergence on the lower side, or we have support or resist. at the current price right now. So we can use the underneath signal chart, hourly chart, for example, to make our trades based on that rules. Of course, rule number 1 to 4. With that in our mind, if you have any questions, please type it in the question and answer box, and I will give you the answer, of course. So I'm really happy that we have so many viewers this evening. And I say thank you, first of all, that you being a part of this great webinar. And I hope you will follow me in the next weeks too. Okay, let's switch to the market. So here we go. So here we go. Okay, so let's start with an interesting trading situation. I want to show you this one and a new trading opportunity. And this is Swiss franc Japanese yen. So first of all, let's switch to the daily chart. So daily chart, look at this one. So this is our daily chart. Just a moment. I don't need that. Okay. So first of all, what is fair value zone, Davide? This is really interesting. I will explain it, that picture. You can see it here right now. You see on the right side, this is market profile indicator. And I guess you know, maybe you know volume trading. In volume trading, you can have an insight in the book map, and you can see how many contracts are traded from supply and demand. So, and in Forex, it is the same. Without the insights in the book map, because in Forex market doesn't exist a book map, because the banks are traded to each other by liquidity pools. But the market profile counts the tick volume together, and at the end you have a fair price. You have a such called point of control. The point of control describes where is the fairest price, where is the most handled or the most traded price. In Forex you can see it, and I use 660 bars in the past. This is around 2 years, and so you can see where is the fairest price, and not with the highest volume, that's not possible in Forex, but where is in that currency pair the most traded price, where feels the price very comfortable. And this is the point of control, and around the point of control is 70% of the traded volume. This is the fair value zone. In my chart is the red zone, and the green lines are the point of low. It's the lower edge of this red zone. On the upper side, it's the point of high, or you can say value area high, the same word, the same description, and it means the higher or the upper edge of the fair value zone. And in this fair value zone, the price is fair valued with the point of control where the fairest price is placed. So, and you see the best behavior, the best opportunities are always if we come from the green zone, from an unfair price value back to the fair price value. And if you can do it with a trend, it's the best chance ever. But don't forget, it is not a guarantee. It's just probabilities. With a high probability, and you maybe remember I said the probabilities are between 65 and 72%. And if you make sure that you come out of the unfair price value zone, it rises up to more than 80%. Because the price, all prices, always have the behavior to go back to a fair price. It's normal behavior. And if you will follow me to the next weeks and month, you will see it. It's always the same, guys. It's always the same. I hope this is the answer of your question, Davide. If not, let me know. Type it in the chat box. So, and now let me show you what we can do here in this pair, Swiss franc, Japanese yen. First of all, let's see. We have a trend. We start at the deepest point, movement, then the correction, then the next move, and can you see where we failed? That's interesting, guys. Where we failed? At the point of low. If we come from below up to the point of low, it's always the same procedure. It fails. It is a resist at the first moment. And you can see the same in the point of control or high. It's always the same. Therefore, there are more sellers coming to the market than buyers. So then we saw, after we failed at that point, we saw the correction. So, and then you can see we have here our, let's see, balance candles. This one, that's the balance candle. I will show you. So look at this one. So this is a balance candle. You see a small body and a shadow on the upper and lower side. That all of that are balance candles. And this one, this is a trend continuation candle. A big body and one shadow on the lower side. It's a short balance candle. Sorry, trend continuation candle. This one is a trend continuation candle. This one, trend continuation, you see in the move. Always, if you have a strong body and a shadow on the upper side, it's a long trend continuation candle. And look at this one, this here. Here you have your balance candles. And balance candle most of the time occurs at the end of a move or at the end of a correction. And this is why we created the rule, wait in the correction for the balance candle. It sounds like that what it happened inside of that balance candle. It's a balance between supply and demand. Sellers and buyers switch the position. More buyers come into the market and sellers are less in the market. So now we have a great chance. Look at this one. Today we get a new balance candle. So therefore we can make a trading idea here. We can create a trading idea because we measures about Fibonacci. You see, you know, rule number 3, out of the correction, get to the highest point. And now you could see we had a close below the 38% Fibonacci retracement. That means we can make this trade. So all rules fit there. We have a trend. We have a young trend, of course. And let me show you. It's enough. You can count in trading to 3, 1 to 3. Let's see. This is a high point. A high point in an uptrend is always point number 2. A correction point in an uptrend is always called point number 3. So now you know the last high is point number 2. It's really easy, guys. And now let me explain here at the deepest point. This is the deepest point, or maybe here is called number 3, but with a question sign. Why? Why with a question sign? This is really interesting. Why? Because at that moment, we cannot know if it is the deepest low. Because at the moment, we don't have a trend continuation. What do we need for a trend continuation? For a trend continuation, we need a close above the last point 2. Actually, we don't have one. Actually, we are in the correction zone. Therefore, only if we will see a trend continuation with a close above the last point 2, then the question signal, the question we can cut, we can quit, or we can delete the question sign, and then this is a valid point number 3. You see, like this one. This is a valid point number 3. This is, or how should I say, is a confirmed number 3. Why? Because after this low, we had a new trend continuation with this candle here on the 24th of June with a close above the last 0.2. And now this is our last correction zone. I want that you can see or understand my wordings. So let's do it in green. So I want to change the color. Come on, let me change the color. Let's see, that's green. I want to make it green. So there's green. So because it's an uptrend is green. So you see, and this is the correction zone. And this is the way I create or I draw the correction zone. The last correction zone is always between the previous 0.2 and the last valid confirmed 0.3. That's the last correction zone. Why is the correction zone between number 2 and the second 2 not part if the correction? Because this is the last high. This is the last high. Thanks for your question. Interesting question. This is the last high. And the correction zone starts at the previous 0.2, down in an uptrend, down to the last confirmed 0.3. This is the last correction zone. That's the part of the Dow theory. Maybe it's one setup, but it's really easy. And you will, as long as you follow this trading style, you can make the experience, it's always the same. So look at this one, a little bit in the past. Look at this one. You see, always the same. So let's start here. I will draw it for you. Deepest point, you see, movement, correction, movement, and then we had the last correction zone, the previous 0.2 down to the last 0.3 here on the lower side. And you could see here the point or the price always go back inside of the last correction zone. Look at this one. Then we had a trend continuation and we have the next correction zone between the previous 0.2 and the last 0.3 here. You see here. And then you could see, interesting, look at this one, interesting. The price came back inside of the last correction zone and then went deeper, and then we had the next one and the next correction. And you see, especially at this point, it's not a guarantee, but most of the times, more than 90%, the price always go back at least to the previous 0.2 or deeper in the correction zone. It's normal behavior of every prices. And this is a really interesting information you need for your trading. It's kind of trend trading. And you see, we see the next charts, it's always the same procedure. Prices after every move go back in the correction. It's changing supply and demand. That's normal trading. That's the nature, guys, the nature of trading. And really, really, if you recognize that and if you realize that you can train it, and then trading is no more longer rocket science. It's really easy. So you see, we were in the correction zone, at least at the deepest point, 61% of Fibonacci. And then we have our balance candle. You see 1, 2, 3, 4. And now today we get a new balance candle with a small body and shadow on the lower and the upper side. I know the day is not over right now, not yet, but balance candles, you have to know how they look like. In one balance candle is always included the prices from yesterday. Open, high, low, close from yesterday is included in the current Heikin Ashi candle. So, and if you see Today, a balanced candle, it means that we yesterday had up and down, up and down. It's a balance, and this balance occurs today. Can this be used for 1 minute and 5? Of course. Of course. Look at this one. I will show you. You can use it in 1 minute as well. Let's see. Let's, for example, DAX. Can you see it in the daily chart? This is DAX. Always the same behavior. Look at this in 1 minute. Always the same. It's amazing. Let's see in 1 minute. 1 minute is more volatility, but you see, it's the same in 1 minute. Can you see it here? Let's see. Here, this one. You see movement, correction, movement, correction, movement, correction, movement, correction, movement, correction, movement, correction. And now just have a look. The price, this is the last 0.2. It's an uptrend. Can you see how far the correction will went? Here, look at this one. Guys, that's amazing. Look at this one. Exactly pinpoint back to the point, to last 0.2. Then you saw the next one. That was the beginning of the last correction zone. Almost reached. It's not a guarantee. It's just probabilities. But you see, then we had here the next 0.2. And you see the price went back almost to the next 0.2. Then here, that was the next point, last 0.2. You could see the correction went up at least to the last 0.2 and always the same. And then it goes up. Then we had the change of the trend, and you can see movement, correction, movement. Can you see down in the last correction zone? Because the last correction zone, look at this one, were placed from here to last 0.3 on the lower side here. And the price went back and tried sideways, deeper, but without the trend break, without the trend break. It's amazing, guys. That's trend trading. It's not a rocket science. That's nature. It's always the consistently changing from supply and demand. Always the same, always the same. And then you had the trend continuation. Look at this one up to here. And then, so let's see. And then we had the next correction zone from the previous 0.2 down to the deepest point, where here as well. And you can see, oh, look at this one. The price came back exactly in this correction zone, 0.2. That was the 0.2, 0.3 on the lower side. Then look at this one. You had the next move. And now draw your last correction zone from the previous 0.2 back to the 0.3 here. Last 0.2, last 0.3. And you see how far went the price back. Come on, guys, you can see it exactly to the last 0.2. And it's always the same. So you can use this. It's normal trend trading. Is there a maximum number of either movement or correction that can be made in a particular trend? No. A trend is always valid as long as we don't have a trend break with a close above the last 0.3. So now you can see that was here. Then we had the next move. And then here was the last 0.3. And then you could see there was the trend break. And then maybe a new trend will start. Follow the trend. That's the point why you saw in my rules use young trends. Maximum fourth trend arm. So one movement, one correction is one trend arm. If you have the next move, the next correction, this is the second trend arm. Next move, next correction, third, and next move and next correction, fourth trend arm. Use maximum to get into a trade, outcoming always from the correction zone, always from the correction zone, always out of the correction zone. As a signal, you get the balance candle in 1 minute, 5 minutes as well to get into the trend. But make sure that you always have the support by the bigger trend. This is really, really important, guys. So, okay. That's the point. I hope this will answer your questions. And sometimes a trend is running more far, and sometimes what if the trend goes? Then you have to wait. Then you have to wait. Wait for a trend. Always wait for a trend. So let's maybe switch to 5-minute charts. Wait for a trend. So you can see it. Look at this one. A trend continuation is always more likely than a trend break. Look at this one. This is amazing. That's 5-minute, for example. Now, it doesn't matter what kind of underlying you use. Look at this one. Movement, correction, movement, correction, movement, correction. Look at this one. Movement, correction, movement, correction, movement, correction. Always 0.3, 0.3, correction point. We never had a close below the last 0.3, but the price always came back into the last correction zone. Always. Look at this one. That's normal behavior of prices. That is the Dow theory, the nature of trading. Because after every move, the next correction will come. So look at this one. Next move, next correction. Next move, next correction. You see, I can draw it, and it's almost endless in this case, almost endless. Look at this one, almost endless. And now it's interesting. The trend is still valid. Why? This is your previous 0.2 here, 0.2, correction 0.3. This is the last high, last 0.2. We didn't have actually a trend continuation because we didn't have a close there, but as well we didn't have a close below the last 0.3. So we didn't have a trend break. So what should we do if the trend will go? What should we do? Nothing. If you will have a trend break, here, then wait. And if you can see this will be a new trend, try the same. Outcoming of the correction. Outcoming of the correction. Always outcoming of the correction. That's the point you can use for your trading. But please, attention guys. Make sure that the higher time frame, the big picture is supporting you. If you want to make trades in 1-minute chart, make sure that the higher time frame, maybe 10 minutes, 50 minutes, is supporting you with the own trend, same situation, with the divergence, with the templates I showed you at the beginning of the webinar, or by a supply and demand. If you want to make trade in 5-minute, make sure that you have the support by the hourly chart. Same situation. Let me show you that point again. You see, if you want to make a trade in the 1-minute or 5-minute chart, make sure that the hourly chart is supporting you by a trend. You can see it here in a chart. By a trend that you can make both hourly chart or 50-minute and 1-minute and 5-minute trend trading, outcoming of the correction, the yellow arrow shows you. Or you have a divergence in the higher time frame that you can see the market will react on that in the underneath signal chart. Or you have a supply and demand, resist or support or resist. You can use for your signal chart. This is really important. So you see, trading must not be a rocket science. Trading at itself, it's really easy. But you have to make sure and you have to accept that there is not a guarantee. There is not a guarantee. But if you make trend trading and if you make sure that the higher time frame is supporting you, you have a really, really great chance. So I hope you learned a little bit something. And let's get back to this point. Now we want to make a trading idea. So let's get into, and always I go into the chart after the balance candle with a market order. So here I want to go always above the with a pending order above the balance candle. So that means at round about now 109.91. So let's set this new order. Oh, let's see. First I have to calculate my position. I will show you at least this point. So come on. Ah, here we go. It's there. So I want to go inside of the market at what did I say? At around 109.91. So 109.91, and I stop below the last 0.3 with a question sign. I want to have a stop, below the last 0.3, because I want to make trend trading. And if you have a close below the last confirmed 0.3, then we have a trend break. The idea is over. So I have to set my stop 107.77, 107.77. And now you see, okay, I can risk 1 micro lot. Okay, that's fine. I can risk this one. Come on now. So stop loss, I said 107.77. Target, I will trail it. Pending order, stop buy order at 109.91 and place it. So then we will see. But I give you a last hint. I have a mental stop order, such called soft stop, at 108.99. Because if the price will go deeper than this 0.3 with question sign, I will close the trade and I will get into the market again if we see another balance candle a little bit deeper. Because I never risk all my risk. Never. I always have a soft stop and then I react on that. Maybe we can talk about that next Wednesday. So, guys, thanks for your attention. Thanks that you're being a part of this webinar. I hope you learned a little bit something. And maybe if you want to follow me and if you want to have more information, just a moment, I will give you my email address if you want. info@trading.com. So this is my email address if you want to have more information, because unfortunately this webinar series Master Markets will end next Wednesday. If you want to have more information, type me or write me an email, then we can have an exchange to each other, we can talk to each other, and maybe I can encourage you through your own trading process. Don't forget to find your inner point, to find your freedom with trading is so much more important. In LinkedIn, oh great, then send me an email or send me a message if you want, then we can have that, just trading. And yes, in my opinion, it's so much more important that you find the purpose of your existence, that you find your real why. That means find your inner center, find your own freedom, and then you can become a successful trader. This is the job from me. This is a job as a coach. And I want to support you in that way, because personal growth, personal development is a part of trading. You cannot become a successful trader without personal growth. And this is my job as a coach to give you that information. Guys, have a nice evening. Thanks for your time. Thanks for your lifetime. I'm really grateful that you was a part of this webinar. Have a nice time and be careful about your thoughts. They are the beginning of your actions. Bye-bye.